Okay, this is Jerry Sarmiento from Houston. It is now 2:38 p.m. That's 3:33 almost p.m. in New York. So the market is about less than half an hour from closing. Let's see if we can get some learnings here from what transpired today. I'm looking right now at my cues and the SPY, and as we can see in both of them, they are climbing. This is the daily view. Let's take a look at the weekly. The weekly is a clear climb. That's the 20 moving average is the blue, 10 moving average is the red. It is clearly on a upward basis. The SPY, it looks like railroad tracks, so it's a pretty nice climb, but it has been very slow as far as the range is very small, made it feel like moving molasses. So no wonder why it's moving like that. If we look at the monthly chart, we see that the 20 moving average is the blue line, and the price is very much overextended from the 20 moving average. And I have talked about this before in another video about overextension from the 20 moving average and the tendency of the price to come back to the 20 moving average whenever it deviates too much from it, like here coming back down, like here coming back down, breaking it, coming back up, like here. This is early 2020, this is February 2020. How can you forget that? It was also a little bit overextended right here, and of course we had the COVID breakout, and the whole market collapsed pretty badly during that time. It recovered in April back to the 20, moved up, overextended from the 20, pulled back trying to reach it again, started moving up again, and hasn't looked back. It has been pulling away pretty nicely from the 20 moving average, but what that gives me is a little bit of pause, because according to my observations here, this thing needs to come back to the 20 eventually. It could come back in a violent form, like just crashing into it, or continue moving sideways for a while and give it time for the 20 to catch up with it. If it keeps moving sideways, it's going to be a very painful time for us traders, day traders, because this is the kind of action that we're going to see, which is totally sideways. Very frustrating. One moment going up, one moment going down, recovering. In this case, the SPY today, this is the 15-minute view, had been trading pretty much under VWAP and under the moving averages. And the Qs are similar, they present a similar view. Let me look at the monthly on the Qs. The Qs are also very overextended from the 20, and it's a similar story. Over time, you don't see much. When it moves far, it comes back to it. When it moves out too much, it comes back to it. Moves out, comes back to it. Moves out, tries to come back to it, but in this case, like in the SPY, it remained moving upwards. This piece here has been a very frustrating time. A lot of sideways. You see, this is a doji, this is a hammer, and this shooting star. I mean, these are all indecision candles on the monthly. and then we have finally, in the month of where we are now, in the month of April 2021, we see it like breaking up again. But there's this issue of the overextension from the 20. So that gives me quite a bit of pause as far as what's my strategy for day trading during this period, because as I said before, this is what we're gonna see sideways, very frustrating movements. This is Apple, for example, on this side. Look at that. It opened, gap down, it recovered with force, and then it moved sideways and then down and then sideways for the rest of the day. Here I was observing it. The volume is much lower, relatively speaking, much lower than the beginning of the day, and lower than the beginning of the days for the recent past. So it's been trading under VWAP, under the moving averages, and no clear view of what's going to happen. In my mind, this is what bothers me. You know, if you look at the daily, it is right now within a tight range for the past 1, 2, 3, 4, 5 days, and on the daily in the SPY is almost the same. You can say that this is climbing, but look at that climb. Is very small bodies, candles with very small bodies, a lot of indecision candles all over the place. So that gives me pause as far as how to trade tomorrow, the rest of the week, the rest of the months. So we'll see. The only thing we can do is, if you're on a swing, maybe protect those swings. If you're making money, protect those swings, because if this thing decides to do a correction violently, it's gonna be pretty nasty. It could come all the way from 414, which is now, to 332, which is the 20 moving average. So of course, the way it's behaving right now, maybe we'll continue moving sideways, pulling back a little bit, come recovering, moving sideways until the 20 catches up with it. But time will tell. We are not predicting the future here at all. I mean, nobody can. I wish I could. My crystal ball is discharged, so I can't tell you what's going to happen. But I just wanted to have this view, and as I said, I already have this whole discussion about the monthly being overextended over the 20 moving average, but I thought it was worth repeating it because we're still there. Nothing has changed. I think I said this last month or 2 months ago. So it was overextended. It's getting even more overextended than before. So caution is all that I can suggest. This is not the time to trade aggressively. I'm trading with a small size now, because you don't want to get caught in a violent pullback with big size. So anyway, we'll see what happens tomorrow. We'll see. It's only Monday today, so we have the whole week to see what the market bring us, what surprises will bring us, and we'll go from there. Okay, I'll be joining again tomorrow morning, early and sharp at opening bell. Okay, bye-bye.